Yeah, I mean, it's usually live stream. That's fine. I don't see a problem with it.
All right, it's 8:17. We're going to start today with before the regular board meeting with a audit committee meeting. So at this time, we'll call the audit committee meeting to order. Open it up to Liz.
Okay. Thank you, everyone. I'm Liz Bush from Bowers and Company. I'm the audit partner on the audit. And with me on Zoom is Janelle Tooper. She's the audit manager. So we're going to go through the draft copies of the audited financial statements in the communication letter. And we keep them in draft form because it's the early part of August and there's so much activity now at Lewis County IDA that we just want to make sure we capture everything. So if there's any changes, we can make them before we have to issue finals. And they are due to state in August 31. So, we're in good shape to meet that deadline. So the first thing up on the screen is the draft communication letter. And what this is, it's our communication letter to the board, whether or not you had to adopt any new accounting policies, and whether or not we had any disagreements with management or difficulties performing the audit. Namely, that would be if we had differences of opinion on how to apply accounting principles, which we have not. We've always worked well and very closely with management. So, and then also we would disclose in this letter if there were any significant adjusting entries that had to be made, so we could finish the audit, which there were not. There were some adjusting entries. There was some handful of adjusting entries, which we provided to Cheyenne. But again, nothing significant. So that's basically in summary what this 3-page letter discloses. So the next item is going to be the audited financial statements. And we have everyone here, and then we also have them on streaming up above here. So would you like me to just tell you what page I'm going to? Okay, that would be perfect. Okay, so immediately following the table of contents, it's the independent auditor's report right there. So here is the report on the financial statements. It's our report that we issue. Right at the top of the report is our opinion, and in the second paragraph, we issued a clean, unmodified audit opinion on the financial statements, which means that they were fairly stated in all material respects with generally accepted accounting principles. And then below that's our basis for opinion. And we conducted our audit in accordance with generally accepted auditing standards and also government auditing standards. And the reason being is that you do receive some pass-through federal funding, and also that you have to report to the New York State Authority Budget Office, and they require you to have audits in accordance with government auditing standards. On the next page, we disclose the responsibilities of management for the financial statements. This has not changed. Management is still responsible for the preparation and fair presentation of the financial statements in accordance with generally accepted accounting principles, and to have a maintenance of internal control in place so that you can ensure that your numbers are accurate for financial statement reporting. And then also management's required to consider whether there's any doubt for your continuing of a going concern. So with your cash flow, and there isn't a going concern problem, you will be in existence next year. Directly below that, in the third paragraph, is the auditor's responsibility for the audit of the financial statements. That is not changed either. We're responsible to obtain reasonable assurance that these financial statements are fairly presented. It's not absolute assurance, but it's a reasonable, a high level of assurance, excuse me. And then below that, there's some bullet points here. This auditor's report is new last year. So last year was the first time that you saw this. Before, it was just a very simple auditor's report, and now we're required to put in all this detail. So in essence, management's responsibility, our responsibility hasn't changed, but it's more volume, more detail in this report. So I'll just go through quickly. we're required to do a risk assessment of, factors that could make a material misstatement in your financial statements. We do that in the beginning of the audit. We obtain an understanding of internal control, and we evaluate the appropriateness of the accounting principles that are policies and principles that are used in the financial statements. And then over on the next page, we also conclude whether or not we have a consideration of whether there's a going concern issue, which we do not. You do have required supplementary information. This is on page 3. Sorry about that. I forget that I have to tell you. So required supplementary information, because you're considered a governmental entity, you have to have a management's discussion and analysis, which we'll see shortly. That's considered required supplementary information. You have to include that, because if you didn't include it, then we couldn't give you vaccine unmodified statement. And then directly below that, the last paragraph is that we conducted the audit in accordance with government auditing standards, and you're going to see a separate report at the end of the audit. So on page 4, we start the management's discussion and analysis. And this continues on through page 12, page 12. And I encourage everyone to read this. What it is, it provides some very high level operation highlights, financial highlights, gives a condensed summary of the financial statements, which I'm going to go over in detail here in a minute. And then near the end of this, there's all of the economic outlook and things that are in progress for the IDA. So this is written by management, so I won't go through that. So if you want to turn to page 13, it's the statement of net position. This is the first of the set of the financial statements right there. That's great. So here is your statement of net position. It's a balance sheet as of May 31, 2023. And so you ended the year with total assets of about 5.1 million. And that is an increase of about 2%, or about $97,000 from the previous year. So a small increase. We did see an increase in cash. Cash was at 3.3 million for the unrestricted cash. And you do have restricted cash of $165,000, and that's in those restricted grant accounts. There was a slight increase in loans receivable this year. It's about 270,000. So you see new loans coming in. And then we also have the other receivable, which is the long-term agency fee for the pilot agreements. Very minimal liabilities below. So that leaves you with a total net position of 5.1 million. That's up about $95,000 or 2%. And again, most of that unrestricted. 4.7 million is in cash and receivables. Over on page 14, we have a statement of revenue and expenses and changes in that position. Or you can refer to it as an income statement. So here we disclose your operating revenues. And for your operating revenues this year, you had just slightly over $600,000. That is a decrease from last year. Last year you had agency fees of about 1.5 million. This year it's $265,000. And that's just based on, when agreements are signed into place. So not unusual to see a fluctuation in operating revenue. So this year they did go down. And then down below, we have total operating expenses, and that ended the year with about almost 470,000. Just a very slight increase over last year. Obviously your largest expense will be salaries and wages of about $187,000. And then we do have grant expenses of $102,000. And those grant expenses are CDBG, and you have a corresponding grant operating revenue above. So pretty much washes each other out. Down below, under the operating income, we have non-operating revenue and expenses. Here you had a loss on the building. That would have been the sale of the Lions Falls building. There was a loss on that just based on the purchase and what the building was purchased for, and all the improvements into that, and then what you could sell it for. There was a decision made that was discussed in the management's discussion and analysis that would be an economic benefit to the community, and to sell it at that price. So you ended the year with a change in net position of $95,000. Over on page 15, we have the statement of cash flows. So here it's just, this statement just shows how that change in cash from the beginning of the year to the end of the year. So that the beginning of the year, you had 3.1 million in cash, and at the end of the year, you had 3.5 million. That's based on your unrestricted and your restricted cash. So how did that cash increase by 400,000? Well, the net cash provided by operating activities in the middle of the page was about 465,000. And then in the middle of the page, the net cash used in capital and financing activities was about 69,000. And that was due to the purchase and the difference between the purchase and the proceeds of the sale of the capital assets. And you did have some interest earned of about 15,000. So those are all of the items that would attribute to that increase in 400,000. Over on page 17, we will start the notes to the financial statement. So the first set of notes, starting in note 2, are your significant accounting policies. We did not have to implement any new significant accounting policies this year. There was a new lease standard that was effective as of May 31, 2023. It really had very minimal impact on the IDA. We did look at that to make sure you have a short-term building lease, and that did not qualify for that. So we monitor that each year to make sure you don't have to implement any new standards. So if you want to turn, since there aren't any new accounting policies, if you want to turn to page 21. Here we have note 3. And this is the note that discusses the concentration of credit risk, interest rate risk, foreign currency risk. You don't have foreign currency risk, you don't invest in foreign currency. So in the about 3/4 of the way down the page, we disclose what your bank balances are as of May 31. They were about just slightly under 3.3 million. And all of that money was either insured by the FDIC or you had collateral in place. And that's good. You want to make sure your deposits are collateral. Over on page 22, note 4. So this is the detail of your capital assets. You started the year with about 165,000 in capital assets. Did purchase the Lions Falls building, then turned around and sold it. So we ended the year with just slightly under 163,000 in assets. There is some construction in progress in there for about 74,000. That has been construction in progress for a few years. We did discuss with Cheyenne and Brittany, want to continue that to see, whether that property is going to be developed. And then the rest of that capital asset is the Trinity Act building. Over on page 23, we start a very lengthy note. We overhauled this probably about 3 years ago, maybe 2 or 3 years ago. And so we made it, we provided more detail in here, worked closely with Cheyenne and Brittany to make sure that you had the proper policies in place and an allowance for loan losses, which is calculated. So it was a nice addition to the IDA financial statement. So note 5, loans receivable net. So we go into detail. You have unrestricted loans that you develop that sustain that IDA money, but then you're also participating in the micro enterprise loan program. That's money that comes through CDBG money from the county, and then the USDA RBA grant. So you do down below, we see the loans receivable. We do discuss in detail what they are. As of May 31, 2023, we still had SKU brewing, and then, effective June 1, that did transfer over to backyard again. So as of May 31, you still had 2 loans receivable with SKU. The last one at the bottom of the page was paid in full. And then continuing over on page 24, we also have loans receivable with Black River Valley Natural, Snow Ridge, and a new one that's the tax. So we had total loans receivable about $289,000. We take out an allowance that's calculated. Keeping allowance for loan loss just for future loan losses, that's about 13,000. And then your current portion, these portions that are due within 1 year are about 64,000. So it leaves you with a net long-term loans receivable of about $211,000. You did have approximately 233,000 outstanding commitments to grant loans at May 31. We are discussing that more in note 13. You'll see that in subsequent events. And it's basically with the transfer of SKU over to backyard loans. Over on page 25, still note 5. We see the future maturities that we can expect to receive for the loans receivable. It fluctuates based on those amortization schedule. And then we discussed down below the credit quality information that was implemented. You have an internally assigned grade of satisfactory loans, watch, or substandard. So as you see on page 26, management's determined that all of your categories are in the satisfactory category. And we, when we adopted this a few years ago, it was borrowed from a local development corporation that had something similar in place. And we were trying to find something that would work for the IDA and just get those loans receivable in a place where we could, identify what a loan loss would be if there were loan losses. So a lot of background work went into this on behalf of management. And then below that, credit quality information, you also see the aging of your loans receivable. So you can see out of that $289,000, most of it's current, $262,000, and then you do have a small amount that was, anywhere between 1 to 90 days, and that was skewed brewing notes receivable. And still on page 26. Sorry about that. I forget to tell you. I apologize. We do have a discussion of what your allowance for loan losses at the bottom of the page. Started at 28,000 at the end of the year. It was about 13,000, just based on those internally assigned grades. And then we move on to note 6 on page 27. This is the other receivables. This was new last year. So what this was some of your larger pilot agreements have long-term agency fees in place, meaning that you're going to collect that over a period of about 5 years. So you see the free disclosed here for the various projects: Roaring Brook, Flat Rock, Wind Power, and number 3 Wind. So those are the balances as of May 31, 2023. And then near the bottom of page 27, you'll see what your maturities are over the next 4 years, what you expect. So in 2024, you'll expect to receive about 414,000, and then so on and so forth over those next 4 years, just based on those amortization schedules and the agreement in place. Over on page 28, we have some more notes. We do have note 10 on the short-term operating lease, and what this is, used to have a note here before for leases, and this is for the rent that you pay for the office space. And then you have a sublease that money comes in for that, but this did not qualify for the overhaul of the gas B87. It's all short term. So basically, your net rent expense is about $3,400 a year. Over on page 29, we also disclose more information on your other grant revenue in note 11 at the top of the page. Basically, you've had some of these programs in place for several years. In the third paragraph, we also know with the CDBG micro enterprise program that you did have grant revenue of $102,000, but then you also had an additional admin fee come in for $15,000. At the bottom of the page, note 13, subsequent events. I just talked about this earlier. So we had some items here working with management. First paragraph is that you entered into an installment purchase agreement for 10 years for the building on Trinity Ave, and that's effective as of June 1. For a sale of $100,000 in interest. And then additionally, Skewed Brewery was released from their installment sale agreement, and then Backyardigans did sign an agreement with you on June 1. And then as these agency agreements were approved as of May 31, but June 1, those balances would be included as of May 31. On the next page is the government auditing standards report. So this is The additional report that's included in your financial statements, one, because you do receive some pass-through federal funding, that's the CDBG. And then also that you have to comply with the New York State Authority Budget Office, all of their compliance items. So here, it's not an opinion report, but this is an opportunity here. If you had material weaknesses or significant deficiencies in your internal control, we would disclose them here. Or if we found some significant compliance findings, so you continue over on to page 31, you see that we do not disclose any type of finding like that. So that's great news, great work on behalf of the board and management and all, all of the staff and everyone here. So findings, and then on the last page, it's a 2023 investment report. One more page, it doesn't have a page number on the bottom. You have one more page, yeah. So this surfaced a few years ago at one of our other IDA local development corporations. They didn't have any investments, in like securities and they just had cash or CDs and whatever. And the authority budget office said, no, we want to one sentence here that you don't have investments to report. So we did include that. Kind of dropped off from that and a couple other ones in some other counties downstate, and they didn't ask for it. And then it resurfaced again last year with one of our other, I think it was a local development that they asked to put that back in. So we'll just continue to keep this in here until we hear otherwise from the authority budget. So
I think Paris does like it.
do they like it? Yes. So we'll continue just to say increasing investment. So
What would qualify as an investment?
pretty much if you had if you had money at one of the brokerage firms, if you had like securities, marketable securities, bonds, you had an investment account. Usually when you have an investment account, I mean, some banks do have like an investment branch. I mean, you would know if you had investments because then you would see fluctuations like unrealized gains or losses or realized gains or losses that you had sales. Any questions?
On page 27, the state is trying to change the pilot situation now. And is that going to affect the legislature?
Well, that's a good question. I don't know if that would affect that. I mean, I would have to research that because these are agreements that are already in place. So, I mean, they were signed agreements between the entities and the IDA. And their maturities, I mean, all of them will mature by 2027. So I don't know if that would affect. Have you heard anything?
Yeah, the IDA fees won't be affected because they're not part of the pilot.
Oh, okay.
They're separate. So
Okay, it's just, all right. I understand.
yeah. Thank goodness.
Yes.
Kevin, if I'm right, it's the local municipalities that are going to be affected with this change, right?
The opportunities in the future. Future pilot.
There would be no incentive to enter into a pilot, yes, yeah.
But for the agency fees, since they are signed in place in the agreement. Yeah. Lots of changes. So.
All right, great. Any other questions for Liz or Janelle's been on?
Janelle's on too.
Thank you, Janelle.
Janelle, anything you want to add or?
Just again, thank you so much to Brittany and Cheyenne. I do appreciate all the help on this. Obviously, there's quite a few 100-page documents going back and forth with all of the new contracts and agreements, activity, etc. So we do appreciate all the work put in by management and staff to help us complete this audit in a timely manner. And this year we had a quick turnaround on it. And again, I greatly appreciate all of the effort. So.
Yeah, appreciate
you.
you consolidating some of those questions when it took me a minute to get back to you.
Yeah, she's good at that. She's very good. Janelle would have joined us today, but she lives an hour north of our Watertown office, and I really did not, she's been working real hard this summer, I really didn't want to put her through having to come an
Yeah.
hour and then another, you
No
know,
worries.
half an hour.
Many deer out this morning, so.
Oh. I'm glad I wasn't there.
Yeah.
All right, so if there's no other questions for Liz or Janelle or Shai or Brittany, we would, basically will, take take the suggestion of the audit committee, which I think is officially.
Yep.
If the suggestion is made to approve what was presented and then in the full board meeting, then we would have a vote,
Mhm.
so. Tom, are you,
I'm all good.
all right? All right, so it's, what is it, 8:43, we'll end the audit committee meeting. And we can call the regular August board meeting to order.
Thank you. Liz, I don't know if you want to stay for the approval, but you don't have to.
I mean, I could, I don't want
Yeah.
to interrupt your board.
No,
meeting,
you're
so-
fine.
Thank you, everyone. Nice
Thank
seeing
you.
everyone. Thank
Appreciate it. Thank you, Janelle.
No problem. Have a great morning. Enjoy your meeting.
Email me, I think.
Did Chanel email them to you yet? Okay, let me, I'll text her. in the car.
I can always do.
Okay, she may, you know what, I think, I apologize for that. I think she waited until everything was set at the meeting, so I'll shoot her an email when I get in the car, so.
Okay.
Okay, thank you, everyone.
Thank you.
All right, with the so with the regular board meeting called to order. We'll start with the reading of our mission statement. Lewis County Economic Development through its board, the IDA and its brand Naturally Lewis are championing the growth of a community where people want to live, work, build business and play. We foster forward thinking and relationship building, connecting people, businesses, partnerships and resources to effectively and efficiently grow our county. I don't believe we have any other guests for privilege of the floor. So the meeting minutes from July 6th were shared last week by Kaylee. Any questions or comments on those? Motion to approve. Gagan, second. Jessica, any discussion? All in favor? Motion carries, thank you. Cheyenne, financial reports.
Yes. All right, we're looking at our balance sheet for the month of June, so the new fiscal year. Finally, in the assets category, got some movement, because the checking and savings line that pretty much offsets the other current assets line. That's the Otis pilot coming in, coming off the accounts receivable. And then also we received or paid out the Roaring Brook pilot. And that finally came in. So you see that as you scroll down a little bit under liabilities, you see a negative there. And it filters all the way up through to the accounts receivable. No other big movements in the balance sheet this month. Month over month, it's a 0.8% increase in our net position. Any questions on that report? All right. Next one is the expenditures, and you see it's very heavy at the top. I organize it, biggest, smallest transactions. Heavy on those Roaring Brook pilot checks out to the school, the county, and the town of Martinsburg. And then you also see some grant disbursements in there for Vanilla Bean Bake Shop and Cagamello mushrooms and a tax shack. So that's all of the fun checks we get to write. You will see there's a double set of Roaring Brook pilot checks. So when we originally wrote that pilot, it was for a rated capacity of 78 megawatts, I think, and they installed just a bit more than that. So you have the original invoices, the big ones at the top, and then the supplemental down below. In future years, I would just do one time like those out. Any questions on that report? All right. Moving on to the profit and loss. I don't have any big comments on this report. We're in really good shape, especially compared to budget, but I don't think that with too much weight at this time of year. It's 1 month into the fiscal year. The one thing I wanted to point out is the other contract revenue and other income lines. That's the CDBG or Lawrence Lewis County grants that we received in, and then down on the expense line, line 9,000. You see that going back out, or most of it at least, depending on how much administration we have on each check. The only other line is that I wanted to point out is the revenue fees line. That's the Damagala Solar. Between that one and Clear Path, we're just working on getting those ones finally closed out. And Clear Path has paid their IDA fee, Damagala has not. So. Any questions on that report? That's all I've got.
Okay. So, if there's no questions for Cheyenne, I'll take a motion to approve the. Second by Mackenzie, any discussion?
I'd just like to comment that we, in the finance committee on the 24th, we reviewed all this. And I'd also like to compliment Cheyenne on her financial reports, and also all the work I know goes into this audit, because when you deal with an organization that has 5 million, or in the case of the co-op 40 or 50 million, the audit gets to be quite a project. So just thank you for all your efforts.
I appreciate that. This meeting always feels a little bit like a parent teacher conference. It goes well. Bring it down.
All right, thank you for that. All in favor? Aye. Motion carries. All right, now moving on to items for approval. So, the motion would still be to accept it in draft format, correct? Is that how we've done it in the past?
Yeah.
Yeah, I think we approved the draft for
To-
conversion to final
Yeah.
copy.
So, yeah, approve the draft audit, allowing Bowers to finalize the audit for end of August submission.
Do we have a motion for that? Second, or any discussion?
Do we then do it again?
No,
No.
no,
No,
So change.
yeah, unless there's something came up in the course of the next couple of weeks that we needed to change from the draft. Which I don't foresee anything.
All right, all in favor? Motion carries, thank you. All right, next is the health insurance opt-out policy revision.
We've had a number of finance committee and governance committee meetings over the past couple months, so thank you to the board for taking time out of your busy schedules to talk through a number of policies with us. On today's agenda, we have the group health insurance policy revision. Simply just adding or revising the bronze level rates. We hadn't updated them since 2020. And adding an employee wellness plan. Eligible employees would receive up to $300 in reimbursement per year for receipts submitted related to wellness activities. This would be offered to all employees, whether you're on group health insurance or you take advantage of the opt-out. So this has been reviewed a number of times by the finance committee, and the committee recommended that we bring this to the full board for approval.
Right, this is the one that we tried to bring to you last month, but we had connectivity issues and it wouldn't load.
Mhm.
Basically, we compared the opt-out amount that we established in 2020 to what percentage of the health insurance rate that was at the time, and just kind of to have a data point for keeping that about the same percentage over time. Knowing that everything's gone up exponentially in 3 years. And instead of increasing that amount, we added on the wellness policy to give us employees a little bit of flexibility in how they're utilizing the benefits.
Does that money have to be used in our fiscal year or the regular year?
The 1,200,
You know, is that wellness?
Right, within the fiscal year.
Well, it would make sense.
Mhm.
Haley, can you scroll down?
Is this managed by the program or are we managing, employee wellness plan independent of that?
it's independent. I've got questions out to North Country CPAs, just how we need to do that. If it can just be receipts that we submit, like an expense form and reimburse that way, or if they want to see it handled differently.
I mean, did we decide if that was tax free or not?
That's what they need to
Oh, okay, that's, yeah.
cash out for us.
What was that? Has to be taxed? I've had both,
Right,
non-tax.
currently with mine, the
or-
wellness portion, tracking.
Yeah, it used to be non-taxable for me, but then it became taxable, so maybe.
If it's managed by like a HSA or whatever it's called, so many acronyms stuff.
Yeah.
Maybe, yeah, that might be like,
Well, then it has to meet the list of approved
right,
things.
right, but if we're managing it, I think it has to be taxed.
Yeah, that's kind of what the struggle was, is we have it, and that's great, and it rolls over, which is great, but then. Just the nature of our current stat, at least we're pretty proactive in our health, and we didn't have that flexibility in that policy.
Mhm.
And that came up in discussion of, what proportion of it went where,
Mhm.
because there's still the HRA portion, which is before tax, but that's, that falls under the guidelines of specifically what can, what is allowable pre-tax, pre-tax, where this other portion, has more flexibility, but also different rules around it, so it was kind of, there's this total lump sum that's going into that, so how much of that, what proportion do you put in which bucket? Was part of the discussion.
Any more questions? Thoughts?
I'm super excited about this. Sways we both about.
Any comments from the finance?
Basically, we had quite a bit of discussion on it, but we were in favor of going forward with it, and basically, unless something's changed there very recently, none of you actually use the health insurance, so you
Right.
on this other plan. So.
Any questions, ideas, comments? Do we have a motion to approve the update to this? Mackenzie, second. Darlene, any discussion? All in favor? Any opposed? Motion carries, thank you.
Thank you.
Thank you.
Pilot fees.
Hold on, listen.
So in. I guess in our general pilot dealings, kind of a two-pronged explanation, I guess. We don't have our pilot fees established in a document anywhere. It's in the application. When people apply for incentives, but then it's not in policy anywhere necessarily. And we've always had a framework of that floating around in our shared drive, but nothing officially ever adopted. So it gets a little bit confusing when we're approving or going through finalizing pilots with attorneys or in the audit process to like just pinpoint where that fee was established. So we wanted to get it on the books, and at the same time, we've been talking about our UTEP. And one of the considerations that we've had, even though we haven't put framework in the UTEP specifically around wind, some of the other big projects like solar are tending to go much longer than the typical traditional 10-15 year pilot, which means we're administering those pilots for 25-30 years, and it's a little different situation than it used to be. Our pilot fee has always been 1%, and then projects that bump over a $10 million project cost would pay 0.75% on any amount over 10 million. So it gave the bigger projects kind of a break, and they don't even blink an eye at those fees. Sometimes they want them spread out a couple of years, but they don't even blink an eye. So we thought about just a flat 1%, not giving a discount on the bigger projects. And then we thought a little bit more about it, and the projects that do go over 20 years or over, we'd like to see those at 1.5% to recognize the fact that it's not like huge lift annually to administer these things, but it is time for the IT staff. And we'd like to be compensated for that.
Can you guys see the edited version? Okay, because for whatever reason, this doesn't have the edits.
It did for a second, didn't it?
Yeah, I don't. There we go. Thank you.
Yeah. So this policy or fee schedule, I guess, accomplishes two things. It formalizes the fact that we have a pilot fee or an administrative fee, and then also establishes or updates what that fee is. And this did go through the finance committee or governance committee, which one as well?
Fine.
Finance?
No, governance.
Governance, because it's a UTEP conversation. It all has to do with money.
Can't keep track.
Any questions or comments?
Or, I support this structure, but for full transparency, maybe the companies haven't blinked an eye, but this has certainly been a point of contention with municipalities and previous dealings, and that when they're negotiating what they're going to get on a per megawatt basis for the pilot, they have looked at this fee and had sour grapes about the money going into this administrative fee versus what they think could perhaps be more money going into the pilot, because the developer has a certain pot of money they're going to spend. So if some of it is going towards this fee, then that's money out of that pot that's not going somewhere else, right? So frankly, I haven't been very sympathetic to that argument over the years. And I think, there's, we bring value to what we're doing through these fees, but I just wanted to bring that up because I think if there's future pilots that come up in negotiations, you can likely expect to hear about that again. So I just wanted to make sure everyone was aware of that.
And I think, I mean, that, you know, will definitely, or that comment will definitely come up regardless. I think the only place that a negotiation really is taking place going forward is on a wind project. Because we've established what solar has to pay.
Mhm.
And who knows with the new laws, if we even get to negotiate those pilots, but. At least there's that, they have to pay the solar amount and us.
Right.
Just for awareness.
Mhm.
They did complain about that.
Any questions on this? Comments from the governance committee discussion?
Always try to get Darlene's viewpoint as a town board member. Interesting.
It is a different.
Yeah.
In dollars, how much would that increase?
Like, what's a recent example?
That's for. For one project is spending.
It's number 380 million.
Why do we distinguish between 20 years or under?
Because it's a one-time fee, so. So. Paying 1%. Might of the project amount. Might cover a shorter pilot. Administering shorter pilot, but we might want more. So that it covers that additional time. Years.
Are most of yours under 20 right now?
All of the traditional type pilots are. Really weird, but 10 to 15 years.
That's why I was just
Mhm.
20 versus 15. I just didn't know why.
Yeah, I mean, it could easily be,
Like a really long time too.
it could be easily be 15. The only thing going over 15 in any of our established policies are the energy projects. It's about. Something happening, it's fine.
Yeah, I mean, if you look at like a business coming to us for a pilot, it's gonna be 10 to 15 years and then they're gonna be slowly phased back onto the tax roll, right? Where these energy pilots, they've pushed to have those be for what they consider the useful life of the project. Which could, you know, is more like 20, 30 years. And so that's outside of the norm for IDAs in general. But it's been something that, you know, with, because the state has had this interest in renewable energy has been, you know, one of the negotiations, one of the back and forth with the developers of, they prefer the longer pilot, so it was essentially set up for the length of the project. But it is, you know, outside of our traditional way of doing things, and it is a, you know, an added commitment that we're making.
Well, and think about it, in 20, 25 years. I don't know if any of us will even be here, right? So it's like, we need to think about sustaining into the future to continue to administer the pilots, but all of us are gone.
Yeah, so on a wind type project. That would increase the somewhere in the range of 400 to 500,000, depending on how big it is and what it costs at the time. One of our more typical solar projects that we've seen in the 5 megawatt range would be about $50,000 increase.
As mentioned earlier, I'm not seeing a lot of activity around new pilots right now, and
Mm-mm.
don't really anticipate so.
No,
Into the legislation currently. It's gonna.
Right, we're gonna have to do pretty good.
I will say, and I just thought of this, and maybe question for the governance committee too. One of the next items is UTEP revisions, and the schedules for regular pilots are for up to 10 years. So we could, so if we're not issuing, I don't know,
It's a
Usually-
deviation.
yeah, if it's a 15-year pilot, it's going to be a deviation of that UTEP. And we're seeing renewable energy at 20 to 30 years, so we could do 10 years and under, 10 years and over.
We could, yeah, I mean, solar is written, we use up 25 years, right? So that one wouldn't be a deviation, but,
Mhm,
and if they don't like the fee, they could ask for a deviation
mhm.
as well.
Well, I mean, this, I mean, I think there's benefits in bringing clarity to this, and it's fair to look at those longer timeframes, but, you know, then Cheyenne just also made the point about, you know, if we're even further energy projects, is anyone going to be interested in a pilot going forward with the new NYSERDA tax, you know, valuation program? So if we, you know, that's something that we talked a little bit about, but we have to continue to think about what's the value of us, of the pilots. I mean, the companies say they like the pilots because they know their numbers for the length of the project,
Mhm.
right? That brings value to them, even when they've argued that they may end up paying more in the pilot than they would in taxes. They like the certainty of it. But do we bend over to, you know, lower our fees or lower our pilot amount or whatever to make ourselves relevant against the new valuation process? Or do we just say, we don't, you know, you're on the tax roll and we're not part of the discussion anymore? I mean, I think there's arguments either way. From the standpoint of, like, solar is a good example. We're not only offering a pilot agreement, but we've used that as a mechanism to try to create more discussion and influence land use, right? And try to use our pilot structure with the incentives for using marginal land to you know, as a mechanism for controlling poor development choices, right? So not only if we are no longer attractive for pilots because they can get a better deal through the NYSERDA calculator, it not only means we're no longer part of the, you know, getting these fees and part of the discussion of what we can do with the fees for economic development stuff, but we've also lost any leverage we had to try to slow down poor development choices.
Mhm.
So I think, you know, there'll be more discussion on that with the actual pilot rates themselves. But again, the developer has a certain amount, you know, total amount of money that they're looking to distribute through this. So the combination of our fees with the pilot rates and stuff is gonna affect whether they're interested in even talking to us, which in turn affects our ability to try to you know, influence smarter decisions on where stuff gets cited. So I think, you know, that's just that this is a smaller piece of that probably than the pilot rates themselves, but it's all part of the same pie, right? So I think that just food for thought over the next few months as we probably dig into the pilot stuff a little bit.
Mhm.
Personally, if it were me and it was just a matter of, you know, whether we get the pilot or not, I would say there's no reason for us to bend over backwards to make ourselves relevant. But the land use planning side of it makes me more interested in trying to still have a voice in the process.
Yeah, and I'm all about the creative problem solving where maybe our pilot amount does have to become an amount less than or equal to what they're getting through the new calculator, but then we drive those community agreements to the affected taxing jurisdiction so that they can use money that's not tax money to get things done that they couldn't otherwise.
Right.
Well, one of the reasons that Lewis County has so many developers trying to do wind and solar here is actually the price of the land. Our land values are low. And if you go to Western New York, probably it's at least 5 times greater for the price of the land. And so they're looking for a place to build their solar or their wind on where it's cheap.
Yeah.
And so I know I've heard that some of the solar pilots in other places are double what ours are.
Mhm.
Some of our old ones maybe.
You know,
Yeah, the
Well,
land
that-
value does play into it when we
all
get that.
all you have to do is get a little ways to the other side of Syracuse, and the price of land is $10,000 an acre rather than 2 or 3.
Yeah,
Right.
there's a reason they're not building it downstairs.
Lease prices and land values are different, but we've actually had one of the highest pilot per megawatt pilot fees. If you, I mean, a lot of counties that follow NYSERDA's guidance, even in parts of the state where things are more valuable, are still under $5,000 a megawatt if they follow NYSERDA's guidance.
Yeah, it's different everywhere.
And we did initially, we followed NYSERDA's guidance and discovered that it was way slanted towards the developers.
Right.
That's why we increased our penalties. All right, so I guess back to this was on the list for item for approval. I mean, there's been discussion on whether 20 years is the right number. Where do we want
I'm going to stay with 20, I just was wondering.
to, okay,
Why?
20.
any other thoughts on this?
I guess I would stick my neck out and make a motion if you want one to. We'll do that.
Okay, so we have a motion to adopt it as written with the 20-year cutoff. Second, or any discussion? All in favor? Motion carries, thank you.
Thank you. All right,
Director's report.
fun stuff. So updates from the past month. It's been a very busy month for our staff. I would call it a huge outreach month for us. We've hosted a number of really successful events, including the Trinity Ave, Force Ave planning and visioning session for that section of the village of Blauville. We had like, I don't know, 20-ish people there. Really great discussion, great ideas. It was a great event. We also, Jenna hosted our first Empowered series session, which is an educational and training seminar series for entrepreneurs in Lewis County. the theme for that was the 5 basics of financial literacy for business owners, and that was a great discussion. We're going to continue to host those on a monthly basis, different themes going forward. We did a whole hair spill visitation day, where the whole team went up Harrisville for the whole day, and we kind of divided and conquered and met with small businesses and Viking Survey and the municipality, Mount Herb. And that's something that we're going to focus on into the future, is scheduling various community visit days. So our next day is at the end of August. We're going down to Osceola, to the southern end of the county, to just visit with their municipality and the small businesses, and including some of the tourism stuff too. So visiting some of the tourism assets of that area too. We've started doing our annual manufacturing visits over the past couple of months. So just visiting with our large employers, and those are always great meetings to just catch up and see what their needs are and how we can assist them over the next year. We also were very busy with some outreach for the Village of Lions Falls New York Forward program. So again, the village was awarded $2.25 million to go towards downtown revitalization efforts. So we were very much involved in helping businesses get their project applications in. That submission date was last week. So we assisted a few businesses and property owners to get their applications in, and the LCDC actually submitted a project for some beautification on the mill site. And then just want to talk a little bit about some of the pilots that are in the hopper. So we've had Get Her Done and Arbor Environmental up in Harrisville kind of on hold, as well as McBrez Meatpacking, their sales tax incentive. They're working through their site plan approval process with each town, and there's been a number of hiccups along the way with just lack of communication, not knowing the process, lack of zoning. So we are working with county planning to kind of help. They're helping the municipalities move these projects along, and we're working with the businesses just to make sure that they are submitting everything that they need. So a little bit of a struggle with both of those projects, but hopefully they will be moving forward soon. Any questions?
Are there future meetings for the Trinity or staff? Like, did they set one after the meeting session?
No, it's, yeah, if you want to talk about next steps with that.
So, was it Friday, the DRI New York Forward announcement, in New York State came down. And part of the Trinity, not part of what motivated me, but part of the motivation for everybody else to get on board with the Trinity thing is it's kind of feed in really nicely to a lot of DRI applications. So I think when we do the outreach for the DRI, that's when we can kind of roll out more of the information, what we've gathered on Trinity, and then it becomes an implementation process to make sure that the zoning gets updated and stuff, so that a lot of the applicants on the village side. So on our part, the heaviest lift is kind of over for the community outreach part of that. But it's kind of just gonna keep rolling into that DRI process, and then for me, it's finding motivated developers who want to latch onto that vision and move forward with it. It's just some cool buildings, cool opportunity down there.
All right, moving on to new business. The governance committee notes, and we kind of jumped ahead a little bit with. But I think the UTEP is linked to the discussion on the fees, right? So that was a good.
So we've held 2 governance committees over the past couple of months to start the conversation on updating the regular pilot schedules. And, we just felt that the schedules that we've had have been the schedules for many years. And, it was either targeted industries or commercial retail office, community facilities. And when Cheyenne was digging into our current pilots, it just seemed like no one actually followed this schedule. So we just felt like we needed to update the schedules based on what our priorities are now and what priorities are for the entire county. And so the intent for today is to really just, we'll have Cheyenne kind of go through what those changes are going to be, with the intent that over the next month, we're going to work on kind of the packet that we're going to send out to all the taxing jurisdictions. So part of this process, if we are changing our tax exemption policy, we have to send it out to all the municipalities to collect public comment from them on those changes. And a part of that outreach is going to be we're going to host like 3 sessions where board members, community members, whoever can come to wherever we're hosting the session and learn about those changes. So the intent for today is just to kind of go through those changes. We'll take the next month to think a little bit more, with the intent that by September, we'll have the full packet for you guys to review of like the letter we're going to send out, the events we're going to host. And the board will hopefully approve the draft to send out to the taxing jurisdictions. So this is more just for information at this point.
Right, yeah, because typically when we make changes, we get very, very little feedback from towns. Usually Denmark is really great about like actually looking at it and understanding it. And short of going to 20 board meetings for schools and villages and towns, we're hoping that we can get some input and some questions and just kind of create some understanding. If we do 3 this kind of open office hours even throughout the county, where the various boards from that area can come talk to us. Can you scroll down, Caitlin, a little bit? So yeah, the biggest change being to the schedules that we talked about in committee, switching it from a somewhat subjective targeted industries / manufacturing versus commercial retail office structure to a new construction schedule versus adaptive reuse or revitalization structure. Both of these for a traditional pilot are better than, or more incentive than they would have received under the old schedules. And hopefully that helps us help the smaller guys a little bit more, because I mean, we've focused a lot in the past few years on energy projects, but hopefully this can help us make those projects something that we can participate in. Any questions on that?
Do you want to explain that adaptive reuse schedule?
Yeah, let's go on a little bit more, Kaylee. It's lots of red because of the new stuff. That's schedule 2. So the adaptive reuse or renovating existing structures, this kind of falls in line with what everything we're trying to do with the revitalization, the vacant property fund, the facade improvement fund. So it kind of falls in line with all of those programs that are existing. But what it does is in years 1 through 5, it freezes. The pilot is equal to whatever the tax payment was when they started the project. So like for an old jail, Tuck Hill Roasters project, that was assessed at, I don't know, $20,000 or something. And they had a huge heavy lift to do something to that building. So what this would have done for them is their pilot is equal to whatever that, $2,000 or whatever in taxes they would have been paying on the original assessed amount. The pilot freezes it there for the first 5 years and then eases them back on. So hopefully the project is done. They have gotten this up to a $2 million structure building. And then they have that little leeway breathing room to get it going and then get back on the tax roll at full amount. It was a model we saw from Livingston County, and theirs was. A little more complicated and. It froze the taxes for like 7 years and then just plopped them back on the tax roll, and I didn't like that.
It's a big jump.
It's a big jump. So that's why in years 6 through 10, we kind of ease them back up to full taxation.
Could you make that bigger, if you don't mind, please?
And this
Oh,
is.
yeah, so, sorry, when it does ease them back on, we wanted to get in there that. If their abatement's 75% in year 6, it can't be less than what they were paying. Before, it has to be,
So if the improvements were small and the new tax and the new value was. Not that much greater than the old one.
yeah, we want to be collecting at least as much as they were paying in years 1 through 5.
And this conversation stemmed from like the Glenfield School rehab. So that's a very large housing project on an existing building. And we were looking at our schedules and we're like, where does this fit? So instead of trying to identify specific targeted industries within the schedules, we have our project evaluation policy as well that lays out targeted industries for our pilots. And then the schedules are really focused on, is it an existing building or is it a new build? And whatever it is, here's what your pilot would be. So that way, because at first we had thought, well, maybe we need like a separate schedule for just housing because, we want to prioritize housing, but that just doesn't make sense. And yeah, I think about like the vacant property program that we administer through the LCDC, all those projects that are taking these empty vacant buildings, we could go to these building owners and say, here's an incentive for you to do something with your building. And hopefully that helps inspire people to do something.
This is probably an obvious question, but. Like an expansion of a business like Johnson Lumber, that falls under new construction, right?
Yep.
Even though it's an existing business, they're
Right,
doing new construction on it.
right, yep.
Does this have to be a 10-year program?
No,
I was just curious, going from 75, 50, 25, that's a 10. Like, minus 0. I just thought, I don't know. Unless it's like that's I don't think it works, that's fine.
Where I don't know if you've done some outreach, but we're gonna show this to some like existing pilot. Users, I guess, just to get their input on, is this still a good incentive? If this were the structure. When you entered into a pilot with the IDA. So we'll get some feedback from. Existing pilots. Well, I think it's creative.
I do, and I'm thinking back to our conversation about like those 3 open hour sessions. Envisioning top of Lewis, central Lewis, and southern Lewis, and when you do, I mean, utilizing the people we have on the board to kind of decide where that can be held and help get the word out.
Yeah, that would be great.
Would be a good idea.
yeah,
That would be great.
probably Jen.
Thanks.
Just no.
Any questions on this? So, I mean, we're still a ways away from.
Yeah, we'll have the final draft in September. And then I think our timeline, we said by the end of the year, let's try to adopt a new revised policy. But if you have any thoughts in the meantime, just let us know.
And again, just a reminder, you can see the next section on solar, so this is back to that discussion on our kind of our standard pilots versus what we put in for solar as a, as its own specific thing that is different from this schedule here, because it's not based on a per megawatt basis, not a tax value basis. Um, All right, moving on, to finance committee.
Yeah, just an update on the retirement plan. After conversation with Rosner Financial, we realized that the IDA can't contribute more than 3%. So the simple IRA. So we're putting the retirement stuff on hold. We're just doing more research, and it probably won't be changed until we're under the new National Lewis umbrella. So we're just doing more research at this point.
And lastly, update on where the staff services agreement.
So the finance committee also reviewed this final draft version of the staff service agreement between the IDA and National Lewis. This agreement here is for October 1st, 2023 to December 31st, 2023. Finance committee has reviewed it. I sat down with Kevin the other day, and he had some just cosmetic changes to the contract. But this is the contract that the IDA will have with National Lewis regarding staff and the work that the team needs to do on behalf of the IDA. It talks about, like, if you go to Exhibit A, the staff services to be provided, and then Exhibit B is the service fee and the time frame that it covers, and the justification for the service fee. So we want to make sure, especially with the IDA, that we really justify why the fee is what it is. Because we don't want auditors to think that it was a loan or a grant that the IDA is giving to this 501c3. So again, this is more informational. The intent is that at our September board meetings, the IDA, LCDC, and Chamber are all going to approve staff service agreements so that we can hopefully transition and launch the new entity by October 1st. So if you have any other comments in the meantime, again, just let us know, but it's had extensive review by our attorneys and finance committee.
And everyone has access to it, so. You want to look through it again, I'm sure we'll have some more updates on where we're at with the IRS and stuff, hopefully in the near future, but the plan would be to be prepared to move forward with this next month. Do you have any other thoughts on it between now and then? Anything else for today's meeting? If not, we take a motion to adjourn.
I'll make that motion.
Darlene, a second. Sir, all in favor? Meeting